Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here. I'm going to give my analysis and go over my thought process. And the idea here is, the reason we make these videos is for you to learn and to grow and to get better as traders. But first, if you're not already a member at thetradinganalyst.com, go ahead and give us a visit on the homepage of the website and get to know us a little bit better. If you like these free analysis videos that we give to you guys on a daily basis, it's nothing in comparison to the membership you get once you sign up and join the premium membership. As soon as you sign up and join the premium membership community, you're going to get instant access to the profitable trading alerts that our current members are getting and loving on a daily and weekly basis. It's a great opportunity for you to start making money in the market by having winning trades delivered directly to your cell phone in real time. And the cool part is right now, for this week only, you actually have an opportunity to save an extra $100 off of the annual membership by using the discount code SAVE when you check out today after watching this video. And again, this is for this week only, okay? If you try to sign up using the discount code next week, you're going to have to pay full price. So take this opportunity to start making money in the market. Wouldn't it be nice to start making money in the market and make winning trades? And not only that, but have somebody in your corner guiding you through the market every step of the way? Yeah, it would be nice. So take this opportunity to save $100 and instantly get access to those winning trade alerts. All right, so let's get into some charts here. The first one we're going to take a look at is HD Home Depot. And I want to point out, first and foremost, Home Depot is in a massive uptrend. If you look at the weekly chart here, just a massive uptrend since 2009. You can see that clearly right here. So this little downtrend we're seeing lately is really a blip on the chart here, meaning it doesn't really mean much. So we have normal. This is a normal retracement, and it looks to me like a falling wedge pattern here. And falling wedge patterns are great in uptrends because uptrends most likely continue to the upside, regardless of whether this is a falling wedge or anything like that. So it's even better that we have this falling wedge. You can see it gets wider, and then it contracts, gets tighter right here. We're trading in a much tighter range right here lately. You can see the Bollinger Band squeezing. That's the gray line up here, the gray line down here. That's the Bollinger Bands. Another thing that I like to see in rising wedges and falling wedges is a positive divergence in the indicators. And if you put your eyes down here at the MACD, this is MACD, you can see here we're holding this level. You can see we're trading down here on the MACD, but as you can see we're flattening out here. Looks like it wants to cross very soon here, and then right here we've got RSI making a higher low. All right, so here's that low, and then here's this higher low right here. You can see we didn't touch back down to that 30 level oversold on this dip. You can see we came down, got oversold on this dip right there, but as we made a similar low right here, we didn't even come close to that level on RSI. So that's a positive divergence right there, and we're seeing some market strength. So I definitely think that if Home Depot breaks over this trend line, it can see a nice move to the upside. The next one we're going to take a look at is Johnson & Johnson. And here we have just a nice break over this resistance. You can see those resistance here, right there, right here, and here we are breaking over that resistance level. You can clearly see that Johnson & Johnson was using that level as a level of resistance after how many times it touched it. We're finally above that with a nice gap up. So pretty decent volume as well on Friday when we broke over it. MACD is trending up. That's good. RSI trending up. and just a really nice action here. The other thing too I want to point out is this volume point of control. This is volume by price rather than volume by time down here. So volume by price, which is where the most volume has been traded on Johnson & Johnson within this time frame. And since we're looking at almost a year here, this is about 10 months, this is pretty significant to be breaking back over that volume point of control. So we've got a lot of things here working out for Johnson & Johnson. I think it's going to head higher. As far as targets, we've got conservative targets right here at about 138, and that's based off of that previous support right there. There's also a gap fill. There's previous support right here, and right here you can clearly see it's a level, and that is going to turn into a resistance for us. So that's what we're looking at on Johnson & Johnson. The next one we're looking at is Citigroup. And Citigroup, I want to point out, going back to the summer of 2016, we had this really great uptrend that started right here. You can see there's a bounce, almost some hits right here. Here's a bounce, 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 bounce. All right, so the reason I'm going over all those bounces is that you can clearly see that this is a significant angle here for Citigroup, as it's provided some really nice bounce opportunities and it's bounced off of it time and time again. And here we are breaking below that trend line right here back in early February, came back up, retested it, got rejected. All right, so we're still under that trend line. Another thing too is we're right here still below this volume point of control right there. All right, so this is where the most volume has been traded on Citigroup, and we're still below that level. Another thing I want to mention too is this downtrend line right here. This is a really short-term downtrend line, but a downtrend line nonetheless. So we started here, there's a rejection, a direct hit there, right here, and here we are coming into that level. So does this mean that Citigroup is heading lower for sure? No, but it definitely has some work to do before it can, in my opinion, turn bullish. So what I would look for is a break over this downtrend line. If that happens, we'll also be broken over not only this downtrend line, but the volume point of control. And I think that if that happens, we can see a nice breakout. The next one we're going to take a look at is AVGO. And this is another one that definitely has a little bit of work to do. I want to point out this major uptrend line. If you look here on the weekly chart, going back to 2013, I'll zoom in a little bit so you can see it better. So we started here, there's a bounce, 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 another bounce. Here we are bouncing several times. Here we are again. The other thing too that I want to point out is we had a bit of a false breakout. So here's this clear level of resistance. You know, I mean, this is a weekly chart. Huge resistance for about 6 months, and we finally break over it right here. And then we didn't really go anywhere after breaking over that. We just kind of traded sideways and then back under that resistance level, and also below the trend line as well. So does this mean that AVGO can't head higher? No, it does not mean that, but it has a lot of work to do. It's also below the volume point of control right here, as well as this downtrend line that started right here, right there, right here, and here we are coming into it again. So again, does this mean that AVGO can't head higher? No, it doesn't mean that, but it just has some work to do, in my opinion, to really turn bullish. So we called for the bounce against this support right here, but now that we're back up here, you know, the risk versus reward changes, and it's a new setup now that we're up here. We want to see, what do we want to see? We want to see a break over about 258, 260. Okay, a break of 258, 260. To me, that would signal some upside, but just keep in mind this trend line is still above us, so we can come back up here, you know, to 280, for example, and retest these all-time highs up here, and then still be under that trend line and get rejected and head lower from there. So, there's a lot of things going on here for our AVGO. Just pay attention to the downtrend line, the volume point of control, and this uptrend line, as well as this previous highs over here that are going to be resistance if we head higher. The next one we're going to take a look at is Chipotle. And Chipotle right here is at a huge, huge level. So here's the volume point of control here for Chipotle. You can clearly see we're below that right there. But as you can see, we gapped up here, and then we've been trading sideways right here for a while, kind of holding high and tight. To me, it could break out. I have been calling for some downside here on Chipotle, but as the information changes, you need to change your opinion too. So I still lean to the downside, but I am definitely ready and willing to switch to the upside, because if it does break 326, 327, to me it's going to be a pretty huge breakout, because this is the volume point of control. This is a level we haven't been able to break over in about 10 months or so, or maybe about 9 months. It's a huge level, and we've been building up a lot of energy, kind of trading sideways here for a while within this range. And another thing too is right here, just recently, for the last month or so, we've been trading sideways. To me, that's building up energy, and would give it a nice boost if we headed higher. So this is a big if. It hasn't broken out, but I can tell you that if it breaks 327, 330, it's going to break out pretty big here. We don't have a lot of resistance until maybe up here at about 390, something like that. So let's see what happens. If it breaks these lows right here, if it breaks 310, then I think it's going to head lower, or even if it comes back down and closes below 314, to me that would be confirmation of some downside too. So keep in mind these two levels, about 327, 330, and about 314 and down to 310, and you're going to do just fine on Chipotle. The next one we're going to take a look at is GoPro. GoPro here, not a great look. It broke over this little mini downtrend line right here. I'm just going to delete it because it's not really relevant anymore. And then we traded sideways here for a while, built up that energy, and then we made this attempt to break out of this resistance, this range, only to fail right back under it. So this is just, bearish behavior on a overall bearish stock. I mean, if you look at it, it's gone, in the last couple years, it's gone from, $20 down to $5. If you look back even longer, it's gone from 100 down to $5. So, there's nothing more to say about it other than that. So I guess it shouldn't be surprising is what I'm getting at, that it failed to break out. So just keep this level in mind. If it breaks back over, then we can flip bullish, but right now it's just kind of a no touch, and I really wanted to kind of point out that behavior that we traded sideways against this resistance here for a long time, looked like it was going to break over that range, but then ended up failing right here. Not really the best thing that you want to see if you're bullish on GoPro. The next thing we're going to look at is Twitter. Twitter behaving nicely here. What you really want to pay attention to, another thing that you want to pay attention to is how did Twitter behave when the rest of the market was having some trouble. And Twitter was really strong here. We broke out as the rest of the market tanked. Twitter had good earnings right here, and as the rest of the market tanked, it kind of just traded sideways here, built up that energy. I think it's ready for the next leg higher. Traded sideways here for a while, broke out of this range. Now this range is support at about $34. And if we look on the weekly chart here, you can clearly see this is a little bull flag trading up, and then traded sideways right here for a little bit. Now we're breaking out of that range right here, and this is bullish here for Twitter. And as far as the next resistance level is right around 37 bucks. It was previous support back here in 2015, right here for a little bit. And as you can see, it broke that here in mid 2013. And as you can see, it turned into resistance, and then we headed lower from there. So that's a big level here, coming up at about 37 bucks on Twitter, and I think it's probably most likely going to head there. And then again, we have support down here, both at $34 and $31. So thank you for stopping by and watching the video. I hope that you learned a lot and that you're going to grow as a trader and maybe even come away from this video with some nice profitable trading ideas. So if you like this video and you like all the other videos that we give to you guys, it's nothing in comparison to the membership you get once you join the premium membership community at thetradinganalyst.com. And the best part is, right now you have an opportunity to save an extra $100 off of the annual membership. So if you're interested at all, use this discount code when you're checking out today. It's SAVE, and it's for this week only. Again, if you try to use it next week, it's not going to work. You're going to have to pay full price. So wouldn't it be nice to make money in the market? You know, you're going to have somebody in your corner guiding you through the market step by step. Doesn't that sound nice? Yeah. So take the opportunity and join the rest of our satisfied, happy members here, and use this discount code SAVE to instantly get access to the profitable trading alerts that are sent directly to your cell phone in real time for both the buy and sell alerts. In addition, you're also going to get access to the daily member videos, the watch lists, the educational material, and so much more. But most importantly, you're getting these winning trade alerts sent directly to your cell phone that's going to allow you to start making money in the market with winning trades.